Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button. Also, subscribe to our channel and click on the bell button to receive important financial updates at the earliest. In this video, we'll be talking about 6 stocks which are prime candidates for accumulation in markets which remain uncertain. With the bogey of Mr. Donald Trump introducing newer tariffs every day and with the frauds happening around us, these stocks provide a very strong portfolio for people who may choose to invest in them. Also friends, the way to play this information would not be to jump in immediately, but to add them to your watch list and then monitor them till they come at levels where you are comfortable owning them. Please watch this video to know more. Now the first stock on the list is Maruti Suzuki India Limited, which is available at rupees 8783.35 and the symbol for it is MARUTI. Now Maruti Suzuki India Limited is a holding company. The company is engaged in the manufacture, purchase and sale of motor vehicles, components and spare parts. The other activities of the company comprise facilitation of pre-owned car sales, fleet management and car financing. Its geographical segments include the domestic segment, which includes sales to customers located in India, and the overseas segment, which includes sales to customers located outside India. Now, the company has been on a consistent and beautiful uptrend and has been a huge wealth creator. Of late, however, in the market correction, this too had fallen. The market cap of the company is 2,65,327.49 crores, which means that the company is a large cap one. The EPS is 249.89, translating into a price to earnings ratio of 35.15, which is largely in line with the industry PE of 33.40. The book value is 1197.40, translating into a price to book ratio of 7.34. The dividend yield here is 0.85, whereas the promoter holding percent is 56.21, and this is above average. The 52-week high for the company stands at 9996.40, whereas the 52-week low is 6390.55. Research from which we have sourced this story says that they don't foresee any production constraints going ahead with the capacity additions in Gujarat. However, they do expect some margin pressure in the coming quarters due to the recent increase in commodity prices. On the positive side, enhanced scale and better product mix would expand margins in the long run. They expect revenue and earnings to grow about 18% and 16% CAGR over FY17 to FY20E with ROCE of about 24%. Now the next company on the list is Tata Consultancy Services Limited, which is an Indian multinational information technology service, consulting and business solutions company headquartered in Mumbai, Maharashtra. It is a subsidiary of the Tata Group and operates in 46 countries. The current market price for this particular stock is 3451.95 and the symbol for it is TCS. Now the 1-year chart would reveal that for the first few months of the year the company was consolidating, but since then has gone on an uptrend. The market cap of the company is 6,60,802.50 crores, which means that the company is a huge large cap. The EPS is 131.86, translating into a price to earnings ratio of 26.18, which is a bit more expensive compared to the industry PE of 22.63. However, this must be seen against the quality of the company, where it is the undisputed leader in the Indian IT services companies. The book value is 539.40, translating into a price to book ratio of 6.40. The debt to equity is on the lower side at 0.0487, whereas the return on equity is good at 0.3015. The dividend yield for the company is 1.36, whereas the promoter holding here is a very strong factor at 71.92. The 52-week high for the company stands at 3560, whereas the 52-week low is 2268. Now friends, TCS recently became the first Indian company to hit the $100 billion market cap. Also, there was a lot of positive news with respect to the company, where it was winning a lot of huge orders from companies. This provides a level of cushion to the prospects of the company going forward. The third company on the list is NBCC India Limited, which is available at 104.85 and the symbol for it is NBCC. Now NBCC India Limited, formerly National Buildings Construction Corporation Limited, provides civil engineering construction services. The company operates through three segments: project management consultancy, which is PMC, real estate development, and engineering, procurement and construction, which is EPC. Now, the chart would reveal that till about the middle of the year, the company was on a huge uptrend, but since then and in the recent market correction, this stock has severely underperformed. The market cap of the company is 18,873.00, which means that the company is a mid cap. The EPS is 2.04, translating into an expensive price to earnings ratio of 51.40, which is much more expensive compared to the industry PE of 39.40. The book value is 9.30, translating into a price to book ratio of 11.27. The dividend yield is 0.78, whereas the promoter holding is a very strong factor here at 74.29. The 52-week high for the company stands at 145.65, whereas the 52-week low is 89.10. Now, considering that it is the election year and with the government's increased focus on infrastructure, NBCC is expected to be a huge beneficiary of infrastructure spends going forward. With an over rupees 80 billion order book, the company is set for a ramp up in its execution. Now, the fourth company on the list is Bharat Electronics Limited, which is available at 133.20, and the symbol for it is BEL. Now, Bharat Electronics Limited is engaged in design, manufacture and supply of electronics product systems for the defense requirements as well as for non-defense markets. The company's principal products services includes weapon systems, radar and fire control systems, and also communication. Now, the one-year chart would reveal that this company was on an uptrend for the major part of the year, but in the recent market correction, this company has severely underperformed. The market cap of the company is 32,727.12 crores, which means that the company is a large cap one. The EPS is 6.64, translating into a price to earnings ratio of 20.06. Now, this is cheaper compared to the industry PE of 21.29. The book value is 30.56, translating into a price to book ratio of 4.36. The dividend yield for the company is 1.69, whereas the promoter holding here is strong at 66.72. The 52-week high for the company is 193.40, whereas the 52-week low is 130.50. Now, BEL offers good investment opportunities which would benefit from the Make in India thought process of the government and the government's stress on the defense sector. Order book stood at Rs 405 billion at the end of Q3 FY18. BEL is likely to be a key beneficiary of government's focus on modernization and procurement of new capital equipment in the defense sector. Now, the next company on the list is Petronet LNG Limited, which is available at 227.55, and the symbol for it is PET. Now, Petronet LNG Limited is engaged in the sale of regasified liquefied natural gas. The company is engaged in the import and regasification of LNG, and the company operates through the segment of natural gas business. The company's terminals include Dahej LNG Terminal, Kochi LNG Terminal, Gangavaram LNG Terminal, and Solid Cargo Port. Now, the one-year chart reveals that for the first few months of the year, the company was on an uptrend. Since then, the company has largely been consolidating. The market cap of the company is 34,132.50 crores, which means that the company is a large cap one. The EPS is 13.51, translating into a price to earnings ratio of 16.84, which is much cheaper compared to the industry PE of 20.25. The book value is 53.88, translating into a price to book ratio of 4.22. The debt to equity here is 0.4170, whereas the return on equity is 0.1475. The dividend yield percent is 1.10, whereas the promoter holding for the company is average at 50. The 52-week high for the company stands at 275.65, whereas the 52-week low is 198.20. Now, 95% of the company's capacity is booked under long-term take or pay a contract, which provides strong volume visibility. Also, as the Kochi-Bangalore pipeline is expected to be completed by FY19, PLNG's Kochi terminal capacity utilization would improve from the current 5 to 10% to 50% in FY20. Now, the final company on the list is Kotak Mahindra Bank Limited, which is available at 1188.75, and the symbol for it is KOTAKBANK. Now, Kotak Mahindra Bank Limited is a banking company, and if you were to look at it, this has been a beautifully uptrending chart, and a lot of wealth has been created here in this company. Even in the recent market correction, this stock has not had a major fall as such. The market cap of the company is 2,26,548.99 crores, which means that the company is a large cap one. The EPS is 20.66, translating into a price to earnings ratio of 57.54. Now this is much more expensive compared to the industry PE of 27.88. The book value is 145.08, translating into a price to book ratio of 8.19. The dividend yield is on the lower side at 0.05. Kotak's digital initiatives led to a strong 50% growth in customer base during the past 1 year, reaching to about 12 million at the end of Q3 FY18 versus 8 million by FY17. Further, strong loan growth compared to peers would lead to a gain in market share. With the demerger of its subsidiaries on the cards, there is a strong positive view about the bank. Now friends, please don't consider this to be any sort of an advice from us. Please go ahead and do your own research. Also, if you are benefited by the content on this channel, please don't forget to share these videos. Also friends, this is not an original research by us. This is published on one of the major newspapers, and we are producing the link in the description section for you to go ahead and read it and build more conviction around your decision to buy or sell these stocks. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.